Welcome to the Real Estate Reserve Podcast with your hosts, Jason Balin and Ian Horowitz.
What is up? What's today? Tuesday. Happy Tuesday, Ian.
I know the week's it is only Tuesday. It feels like, I guess because I worked all weekend, it feels like the whole week's already gone.
Yeah, I kind of like saying happy Tuesday. Back in the day when people were super charming and nice and like, hey man, happy Monday, happy Tuesday. It caught on, right? It made me a happier person. So
there you go.
So I'm glad to hear. So this is what we got on the agenda. Welcome to the Real Estate Reserve Podcast. Tuning in here live. Typically, we tune in at least once a week. Sometimes we bring in industry guests. Sometimes Ian and I just kind of ad-lib together. So we're going to talk a little bit about what we've been seeing in the market locally, market updates just over the last few weeks, kind of compared to the past. We'll talk a little bit briefly about our guests for our Meetup Group tomorrow night at 6:45, virtual Meetup Group. Everyone's welcome. It's free. We'll be sending out the Zoom links shortly. And we're also going to talk about this new social media platform that we created exclusively for real estate investors, and that is completely free as well. Free. No strings attached. So, Ian, let's talk a little bit about kind of the market. I always have interesting views, and I feel like I have a really good pulse on what's going on in the market just based on loan applications that I get in from prospective real estate investors locally that are looking for capital for deals. I can see kind of how well investors are buying these deals, what areas have been hot, the numbers they're buying. I mean, just kind of share what's kind of going on in the marketplace right now, and also what deals are selling, what deals, how quickly they're going, and things like that. So from what I've seen over at least kind of the last few weeks, obviously we're in a low interest rate environment and it's hard to find good opportunities. But I will tell you that I feel like I have seen some decent opportunities that some of our real estate investor clients are buying. So that's a good sign, right? There has been opportunities out there. Obviously they're not 65 cents on the dollar minus construction costs like the industry norms should be, or maybe even as high as 70. I haven't seen them at those numbers either, but I still have seen deals that have worked that if you can perform and you can execute, they're buying opportunities and they're deals and they work.
Yeah, there's definitely deals out there. I mean, we've talked about it before, and I know this is just a quick show and we're following up, but look, there's deals out there. The question is, how can you make a deal, what you find today, work into your portfolio? Is it a short-term thing? Is it a long-term thing? Me and Jay are doing a presentation Wednesday night after the Meetup Group to a special group of real estate investors to talk about how to utilize capital, whether it's for long-term or short-term. It's the same thing with your real estate investing. Fit it into your model. As to where the market is, on the residential side of things, courts are slowly opening up here in Baltimore, in our region. So completing evictions and some failure to pay rents are slowly but surely coming along. However, the city as a whole is not open. As for deals, just watching what's being posted, watching some of our realtor friends like RJ Breeden and Andrew Undum and this beautiful guy right here, Jim Chivers in the commercial world. I mean, they're still cranking out deals. I've talked to a lot of brokers recently, both in the multifamily world space, self-storage, single family, everything. It all comes to the debt rate, because it's a compression of, or it's a spread over the current debt, right? So if the existing debt right now is 3.5%, 2.5%, whatever you're locking in, and you can buy stuff at 5 caps or 6 caps, you're making that 2.5% or 3% spread. So some of the bigger investors, I'm talking like Wall Street firms, they're looking for this 3 or 4% spread over the debt. It's a home run for them. They don't have to go out and buy government T-bills and super secure stuff. They can buy appreciating assets. So that's where you see some of the market competition coming in and forcing upward pressure. So it's a good thing for everybody.
Yeah. And even though you were somewhat using commercial lingo, it does equate to residential single family 1-unit properties as well. And going back to what you said related to rentals, I mean, listen, I know you don't want to hear that equity doesn't matter, because it obviously does matter. But if you're buying a rental property and it's a long-term investment, the actual equity cushion has less of importance, right? Do I believe you should have equity? Absolutely. Do I believe that you shouldn't get full leverage? Absolutely. But at the same time, if you're buying a property for $100,000, that's worth 120, let's say, right? Or 110 or whatever, and it's cash flowing, and the numbers that you want it to, right? As a long-term rental, you have $10,000, $20,000 in equity. Obviously that deal doesn't work for a flip, but it might work fine for a rental, right? You're looking at it as a long-term investment. Could it appreciate over time? Maybe. Does it have some built-in equity? Possibly. In general, if it cash flows, it's fine, right? That's kind of the way that it looks, especially if you can get cheap longer-term debt on that. Like, let's be honest, the difference between, let's just say you're getting, I don't know, forget homeowner rates. Let's look at bank rates for investors. Let's say you're getting a 4.5%. Let's say you're getting a 5% long-term note on an investment property. Well, let's say at 5%, you're buying it at your payment on 100,000 is whatever it equals, $500, whatever that is. Well, keep in mind that same purchasing power at a 6% rate, if it goes up, really the property's at 90,000, right? So because the interest rate is so much lower right now, it gives you that ability to potentially pay a little bit more and the numbers still shake out.
Yeah, and there's two things to this before we move on. Is from the homeowner side of things, those guys that are doing flips and they're out there and they're grinding it out, you're like, oh my God, I'm getting so much more money for our houses now. Again, it comes back to that this market, that there's a lot of upward pressure because people are taking advantage of. They're moving. I think a lot of people like being able to view houses one time and sell them, especially listing side. There is a compression of inventory. But what it is that the homeowner looks at it. It's the same thing when you go to the car dealership. How much can you afford this month? I don't know. I can afford $400 a month. Great. They're going to put you in a $400 a month car, whether it's a good deal for you or not, right? So, so that's one thing. So you see the homeowners being able to afford more, but both the homeowners and the real estate investors, they have one competitive advantage here, and that I think, Jay, instead of saying long-term debt, we should start saying amortizing debt. That's huge. Whether it's from a short-term lender or a long-term lender, amortizing debt is probably one of the most powerful tools out there. And this is where I get super excited compared to the stock market. Sure, we can all get margin on our stocks and we can borrow money and we can go buy stocks, but you're not paying that debt off, versus where in real estate, you're getting your leverage and you're paying down, even if it's $1 a month, $2 a month, because you got some crazy interest rate, it doesn't matter. You're paying down principal every single month and creating equity or making up the loss of equity that you have because the market just crashed.
That's a good point. That's a good point, and I like that because I think that's hard. Everybody's always about nobody thinks through that much in these particular deals, and it's so important. And I can tell you, for owning rental properties for long periods of time, or Ian can tell you for owning rental properties for a long period of time, the repayment of principal is a real thing. It happens quickly, and I know a lot of people realize that on their primary residence, especially now with low interest rates. And obviously, if you're doing a longer term amortized loan for a commercial property or a residential property, not a primary, I'm saying, but an investment property, typically you're not getting 30-year ammo. You might be getting 15 or 20-year, and that's even better, right? If you can get a property right now and it has a 15-year or 20-year ammo, and it's cash flowing, and a good portion of that is obviously, since it's a low interest rate, is paying down that principal every month. Go look at that amortization schedule. Google an amortization schedule and run your numbers based off of that, right? Because you might only be making $300 a month positive cash flow, but technically you might also be getting another $300, $400, $500, $1,000 a month that's going towards principal repayment every month, and that's a big thing. And And I know people don't think about it like this, but if you have a cheap interest rate and you have, you know, a good amortization schedule, right? Like a shorter period of amortization schedule, right? Go look at it, and that house might only be costing you gross, right? Because obviously your net would be positive with cash flow, but it might only be costing you a few $100 a month to keep that, to own that entire house, which is great.
Yeah, exactly. And the one thing, don't take what we're saying and roll your equity that you're creating by principal pay down into your pro forma. That's an added bonus. That's one way to look at it. Something we just did at the start of the pandemic. We were in talks of, and we were doing it anyway because interest rates were coming down. We refinanced our portfolio, and it's not even that old. And we were able to take our leverage piece from 75% down to 70%. We were able to go from 30 years down to 25 years and still have a less of a payment. Guess what? In a blink of an eye, the whole thing will be paid off. I see Terry's got a good comment here. It says, there's no deal. Send all your overpriced deals to me. There's a prime example. Look, just because the deal doesn't work for you doesn't mean it doesn't work for somebody else. So there's deals out there. The question is, how does it fit into your portfolio? How does it fit into your lifestyle? How can you get this deal to work? And when we say get this deal to work, we're not saying force money into this deal, but if it's the best opportunity that's presented to you at that time in front of you, and you can capitalize it, and you have a clear path to creating cash flow or whatever your goal is in that investment, go ahead and take that opportunity and execute it. It doesn't matter what your outside factors are. If that deal works for you, then go ahead and let it rip.
And we did a show a few weeks ago about some of the recent deals that we had funded for somebody else, for a few of our borrowers. And the numbers work. The numbers were good. Are they home runs? Are they going to fall in your lap? Are they going to be sitting on MLS raising their hand for you to pick them up? No. But anyone who's been in this game that has done marketing, has been doing advertising. There's a few really large wholesalers between the DC and Baltimore area. I won't mention any names, but they do big boy advertising, spend real money on those budgets, and they're expanding and they're growing and their numbers are working. So again, do I think that the margins are slim? Absolutely. Do I think it's the time to just go buy? Maybe not. But again, if the opportunity works, take advantage of it, right? That's kind of the goal. And if you're hungry enough and you're active enough, I can tell you firsthand, I've seen the opportunities of what some of the real estate investors, clients of ours that we're doing loans for, I'm able to see them, and the numbers there's some deals are still there.
Yep.
We haven't slowed down our lending. Our lending's been status quo. So it shows that there's still opportunities.
Yep, exactly. And, again, when I said short-term or long-term debt, this isn't a sales pitch for Jay, but I know on some of the right deals that, if you could get a higher interest rate amortizing note, it possibly could work for you. You don't realize how quick 5 years or 10 years go. It goes in a blink of an eye. It happens super fast. And next thing you know, you got a fully paid off property, or you pay down, you take a 5-year note, and next thing you know, the thing's 50% paid off after 2.5 years. Plus or minus, you can go and refinance it and lever it up into really sweet debt.
Let's go through the Meetup Group and this new social media platform for real estate investors as well. But those both share together on that.
It should go ahead.
On this. Okay, cool. I'm just going to add this to the stream. It'll be easy to see. We'll talk about REI Networks in a second. But tomorrow night at 6:45 p.m., we're doing our monthly Meetup Group. A few different ways that you can register. You can go to Real Estate Investing Incubator Meetup Group, and you can register that way for the link. You can go to this new REINetworks.com platform, and you can register that as well. I don't have the link on there yet, Ian, but I will soon. So we're going to be interviewing a contractor tomorrow. We've had so many people that have presented at the Meetup Groups over the years, and I don't think we've actually had a contractor that does that invests themselves / does contracting and construction for other people. So we're excited to do that. We have a kind of a good list of questions lined up to go through. But again, it's going to be open forum. It's through Zoom, so it's not like a presentation exactly like this. It's going to be kind of a meeting network format. It's in Zoom completely. You'll get access to the Zoom link. Again, none of these people that, if you've ever been to our meetups before, nobody pitches anything, right? It's just a straight presentation value add. So if you're a newer investor, an experienced investor, we welcome you. Real Estate Investing Incubator Meetup Group. Just go to the Meetup site, and you can do it that way. Or in a second, I'll show you another way to do it through REI Networks. Anything else to add about the Meetup Group? Make sure you're there, because we literally have a time slot of 6:45 to 7:45. Because Ian and I have another event that we're doing afterwards, so we're going to be on time. Like, that Zoom is starting at 6:45. We're going to try to keep that presentation till maybe 7:20ish, 7:15 to 7:20ish, because we want to make sure anyone who has questions for her is able.
Yeah, exactly. And we're excited to use our newest platform. And this, like Jason said, we don't pitch. We're not here to sell anything. This is literally the biggest pitch we've ever made on this show or any of these things, is our free platform here. But I'm excited to sit down with Ryan. I'm excited to be able to interact with everybody in the community. I know we already have a few hundred participants already registered, so hopefully we don't max out the Zoom room. And we'll be simulcasting here, but those that want to be in the Zoom room will really be able to interact.
You're right. I gotta double check that, actually. See how many seats we have. Yeah, make sure you're in right exactly at 6:45.
Yep. And so the thing is, all you got to do is go to reinetworks.com, come down to events, click it. I'm an administrator, so it looks a little different for me. Click on here and that you're going, and then you can set a reminder, and you can literally just come back to REI Networks, click on events, and when we're live, there'll be a little blue dot, and you can jump right on there. So, that'll be exciting.
Yeah, let's talk a little bit about reinetworks.com. So Ian and I have been chatting over the last few weeks related to kind of a home base that all real estate investors can collaborate in on a regular basis. You can use the term mastermind, collaborate, network, whatever you want to do. So many of us have been using different Facebook groups. The problem with Facebook groups is, you post something here, then you post something there, and it kind of gets mixed and matched inside Facebook, and there's just not a ton of stuff that you can do inside Facebook groups. Click on topics real quick, Ian. So we have a few different things. We have everything kind of organized through topics. So obviously there's free content and education inside there. You don't even need to register in order. If you go to reinetworks.com right now, you don't have to register. All you have to do is go to that site, and it brings you to the social feed right here. So a lot of the stuff has, some content that we put together over the years, and other people who are collaborating and put content together related to this, and then just ask questions, right? There's an app associated with it. You can go on the website. You can do it any way you want. And if you're not asking a question, or if you're not chatting and communicating with people, you don't need to register. If you do want to register, it's completely free. And you can register. There's nothing obviously to be sold. It's just a way to collaborate with people, with like-minded real estate investors and real estate professionals and real estate agents related to investing, without having kind of the headache of going on Facebook platform all the time. So we're excited about it. The Meetup Group is going to be on here as well. Moving forward, and a lot of other things that we're doing. At some point we'll start streaming right into this platform. But Ian and I have used this for a few other things that we've done in the past, and it felt right in order to kind of use it on this platform instead. So anything else that you want to point out related to that?
No, again, it's free. The only reason you need to create an account is if you want to get on here and actually post a comment. Is the only time you'll need to register. The other nice thing is there is a mobile app, and good luck getting into my phone. There is actually a mobile app. Just look up Mighty Networks, jump on there, type in REI Networks, and it will pull us up inside the Mighty Networks app. And you'll be able to access it. It's way better than looking at Facebook, because then when your wife says, "Are you looking at Facebook?" You're like, "No, I'm looking at Mighty Networks. It's work." But either way, no, it's good. It's super mobile friendly. We do have about 20 members right now. And I expect after tomorrow night that we will be skyrocketing, and this thing will be.
Well, we haven't launched this to anybody yet. It's all been kind of a beta. A few people we've talked to. So as soon as we kind of open it up to the world, to everybody, there'll be a lot more people on there. But we just a quick glimpse. Ian uses it for one of a group he's in, and I'm in it for and collaborating with a group that I'm in. And I mean, I've got a few hundred members. Everybody's like in real time. It's like, hey, I have a question about this. They post it on that, and immediately it's like their home base. They get a few different perspectives. It's like, I need capital for this, or I need this, or I need that. So it's a good use. Real quick, let's just kind of go through William's question. I guess it doesn't. His question related to is no money down possible? He said that two ways. For multifamily or residential. The answer is absolutely. A lot of real estate investors get no money down. Do I think that you could go to one capital source potentially for no money down? Maybe not. It's going to be hard to get a bank to give you 100% financing. It's going to be hard for a hard money lender to give you 100% financing in general. But you got to get creative and collaborate with multiple funding sources. So, for instance, let's say you have a $150,000 project. Like your use of funds is $150,000, right? Maybe you get a hard money lender, your bank to give you 100, 110. Maybe you get a private lender to put up 30 or 40. Maybe you put up 10, or you get a HELOC and put up 10. There's so many different ways to get funding on these deals, and so many of these real estate investors are getting maybe not full leverage, right? Because it's good to have built-in equity yourself. But that being said, you got to get creative. Do I think, unless you're using maybe a one-off private investor who you have a relationship with, they might give you 100% on everything, but you got to get creative and mix and match capital sources.
Exactly. I was just sitting here thinking is that, we've done it on the single family side, and we've done it on the industrial, commercial side. We just bought an 80,000 square foot commercial site. And by technicality, on paper, do I have any of my own cash in that deal? No. Is it all investor capital? Potentially, or yes, and bank debt. So here's the question. What do I have? I have no money in the deal, but I have 100% of the responsibility, right? And I have a lot more fiduciary responsibilities and responsibilities in general to make sure that capital performs versus having my own money in the deal. And if something goes sideways, it doesn't, I don't want to say it doesn't hurt as bad, but you're not losing someone else's money. So you got to weigh your options here.
And also, Ian's got HELOC money in that deal he's talking about, and some other sources. So technically, there's an argument. Well, yeah, it's my money. I had access to it. I mean, listen, I'm not advocating credit card advances, but weigh the options and see that might work, right? If you need maybe you need $100,000 for a deal, and you have a private lender that will put up 80, and then you have a friend that puts up 10, and you're 10 short, and say, you know what? Maybe I do some creative option like this. You got to be creative on these things, and so many people just aren't, because they just unfortunately, haven't been shown how to. But I don't think you're going to find one person to give you 100% of the funds. So I think you got to get creative to try to get multiple people to potentially stack it together. And there's a lot of loans that we do that we put up maybe $100,000 on a $140,000 project, right? So they're $40,000 short, and then they find a partner to put up the other 40, and then they do a 50-50 joint venture or something like that.
Yeah, William, if you jump on REI Networks, we can continue this conversation because there's a ton of creative ideas like cross-collateralization, spread lending on your own personal HELOCs or other retirement accounts you could potentially utilize. There's a ton of things that you could do that we'd be happy to talk about. Also, Jason, why don't we make it in our notes? I think it's time for another creative financing show. We haven't done one of them in a really long time. I think this is a really good topic that we could go on for hours because I actually got to run here in a few minutes. And we got a big meetup coming up tomorrow night. But let's definitely get into this next week.
Yeah, so. I mean, our presentation we're doing after the meetup talks about creative financing. So that's fine.
What will work? more doing houses or apartments for cash flow and retirement?
It's the same.
What will work more for doing houses? What will work more doing houses or apartments for cash flow and retirement? And I don't think it's either of them, because Jason does hard money loans and he can potentially retire just doing them. I can retire just doing single family or apartment or industrial or storage or any one of these asset classes. It's really about a mix and match and creating a diverse portfolio that works to your lifestyle.
Yeah, whatever you're comfortable doing. You gotta determine your goals. You got to determine your resources. You got to determine what you want to do on a regular basis. People that buy that own a lot of rental properties think people that buy multifamily are crazy, and a lot of people that buy multifamily think single families are crazy. But it figure out kind of works best for you. I mean, every real estate strategy, investment strategy works. It just depends on what works best for you based on it. Oh, I know you got to run in. I do as well. I appreciate everybody who tuned in, and make sure you check out REINetworks.com, REINetworks.com. We're going to open this to the public soon, but get on there, ask questions. There's some good real estate investors that know what they're doing, and make sure to check out the Meetup Group tomorrow night related to construction. You're not going to want to miss it. It'll be a good one. Bye, guys. See you soon.
See you.
Thanks for tuning in to the Real Estate Reserve Podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.